Circle just rang the Nasdaq bell at a $59 billion valuation, and behind the usual suspects of Bitcoin, Ethereum, and SEI, a surprising fourth-place asset sneaks into its balance sheet. SEI. The same week, Canary Capital files for the first SEI staking ETF. Radar shows SEI's wallets soaring 74% to the number 2 EVM slot, and Wyoming shortlists the network for America's very first state-backed stablecoin. Meanwhile, our weekly chart screams compression ready to pop, targeting $1.78. Sick of sideways drift? Today, we connect the headlines, the on-chain data, and the technicals. Let the numbers tell us whether SEI's next move is merely a hope or a moonshot. When a company that literally mints the world's second-largest stablecoin goes public, every line of its prospectus gets picked apart by lawyers, regulators, and nosy degenerate analysts like us. Section 8 lists Circle's crypto holdings by fair value. SEI tops the pile, Bitcoin a close second, Ethereum claims third, no shockers there. But right behind that esteemed trio stands SEI. That's a statement. Circle didn't need to mention SEI at all. Plenty of newer L1s never even make the disclosure list. Instead, SEI cracks the top 4 by dollar value, placing above dozens of household name chains. Circle's bean counters don't sprinkle assets around for fun. They buy utility, and they buy narratives they think will resonate with Wall Street analysts who read those filings. Why SEI? Speed and parallelization. USDC's next phase aims for lightning-fast settlements where every millisecond of finality translates into liquidity head starts and fee dominance. Throw in low variance fees and a purpose-built order book architecture, and you see why the staid suits at Circle decided this wasn't just another speculative chip. They staked brand reputation on this pick. And when the money printers vote with balance sheets, the rest of the market usually follows. 2 days after Circle's fireworks, Canary Capital files an S1 that could open the first ever SEI ETF with native staking. Think about that. A product that lets conservative retirement money tap both price appreciation and proof-of-stake yield without ever downloading a wallet. We watched the spot Bitcoin ETF reroute billions in weeks. Now imagine a similar pipe laid into a mid-cap chain just warming up its fee engine. If the SEC greenlights this, traders from Boston to Singapore get an easy on-ramp, while market makers suddenly need inventory. Inventory they'll source from, you guessed it, open markets. Low float meets ETF basket creation and fireworks ensue. Canary's filing may look like a 2-page legal doc, but it reads to me like a starter pistol. Headlines excite traders, but usage pays the bills. Radar's 30-day snapshot shows 8.1 million unique wallets on SEI, up 74%, vaulting the chain to second place behind Base. That kind of jump isn't a bot farm. Fees corroborate it. Flip to Nansen, and you'll see fee revenue surging 60% over 7 days, second only to Aptus. High wallet growth plus rising fees? That's sticky adoption, not mercenary airdrop hunting. Now zoom out 6 months. Active addresses triple, daily transactions leapfrog twice to 1.4 million, and most telling, the slope continues upward despite market chop. Sustained curves beat one-off spikes every time. And here's where it gets interesting. Gaming. SEI overtakes OPBNB to claim the number 1 slot with 7.3 million active gaming wallets, a 33% market share. Remember, gaming traffic tends to be sticky. Players log in daily, pay micro fees, and evangelize protocols on social media. That constant churn translates into predictable fee revenue, which DeFi protocols love as collateral for leverage products. In plain English, more gamers, more fees, deeper liquidity pools, healthier on-chain economy. Regulation usually bores audiences, but the state of Wyoming just made it spicy. Lawmakers there created a stable token commission to launch WYSD, America's first state-issued fiat-backed stablecoin. The commission's candidate shortlist now includes SEI. That's a U.S. regulator pointing at a chain and saying, yes, we might run our money on your tech. Combine that political nod with Circle's treasury stake and the Canary ETF, and you've got a triple-layer legitimacy cake. Treasury, Wall Street, government. Imagine the network effects if a state stablecoin rolls out on, say, banks, payroll providers, maybe even local taxes. Each becomes an onboarding ramp that pumps regular dollars into on-chain liquidity pools. Liquidity begets traders, traders beget arbitrage, arbitrage begets fees. Fees attract yet more builders, an institutional flywheel in real time. Money doesn't just count wallets, it also counts how much value gets locked to earn yield. Messari's breakdown shows SEI's total value locked sprinting past $500 million without the inflationary gimmicks we see elsewhere. Liquid staking TVL is stripped out to prevent double counting. Protocols like Ye Finance, Takara Lend, and Dragon Swap are eating market share months after mainnet launch. A thickening collateral base supports leverage, stablecoin minting, and derivatives, all revenue streams that feed back to validators and, by extension, token holders who stake. Short-term traders want reassurance the engine still revs. ChainBroker ranks public chains by one-week TVL growth. SEI clocks a 7.6% uptick, outrunning stalwarts like Stellar and Stacks, and landing alongside Injective and Algorand in the green zone. Momentum boxes ticked. Let's stitch fundamentals to raw price action. On the weekly time frame, SEI has spent months wedged between a descending ceiling that began at the November high and a rising floor born in April. This week's 70% candle punched straight through mid-range resistance at 28 cents on surging volume. The volume profile to the left tells us liquidity thins dramatically beyond 30 cents, so any decisive close above that shelf could propel price to the first Fibonacci checkpoint. The 236 retrace at 37 cents. If momentum carries, I'm eyeing a cascade of targets. The 382 level at 52 cents. Then the halfway mark at 64 cents. Followed by the golden ratio zone at 76 cents. Beyond that lies the 786 retrace around 93 cents, which historically acts like a magnetic ceiling before price discovery. Should the rally stay intact, the full 100% retrace sits at $1.15. And finally, the ambitious 1618 extension towers up at $1.78. Pure blue sky, where algorithms usually take profit. I'll be laddering out of positions as each zone approaches because disciplined scaling turns green numbers into realized capital. On the flip side, invalidation remains a weekly close under 21 cents or the yellow trend line acting as support. Break that, and the setup is canceled. No questions, no ego. Meanwhile, the Heikinashi RSI is just crossing above the zero line for the first time since December 2024, giving us the momentum tailwind we've been waiting for. I'm dollar cost averaging inside the 25 to 33 cents accumulation box, then laddering out at each Fibonacci cluster. Yield gets recycled back into Ye's liquid staking vault, compounding the stack while I sleep. Circle's accountants, Canary's ETF desk, and a U.S. state are all planting flags today. I prefer to pitch my tent before mainstream media films the stampede. If words like liquidity mining, APY, impermanent loss shielding, or auto-compounding vault make your eyes glaze over, breathe. Because I felt exactly the same when I first plunged into DeFi. That confusion is why I wrote DeFi Financial Freedom, the ultimate beginner's guide. It lays out step-by-step playbooks for staking, rotating stable yield farms, managing risk in liquidity pools, and turning idle tokens into genuinely passive income streams. No trading charts required. The guide is just $4.99, and readers tell me the first strategy alone paid for the book on their very next harvest. You'll find the link pinned in the top comment. Grab it, plug the frameworks into your own wallet, and let's start compounding crypto cash flow. SEI isn't a quiet sidechain experiment anymore. It's where a stablecoin giant holds real dollar value, an ETF prospectus seeks SEC blessing, gamers pour in by the millions, and a U.S. state flirts with tokenizing its treasury. Headlines, on-chain numbers, and technicals all march in the same bullish cadence. So, are you watching the fireworks or lighting them? If today's breakdown sparked an idea, punch that like button so YouTube knows you value deep dive crypto content. Drop your SEI price target or favorite on-chain metric down below. I read and reply every comment. And hit subscribe. Our next upload unpacks a project the smart money is front-running right now. Stay curious, stay kind, and I'll catch you tomorrow in the next one.